Today's Friday, December 22nd, and the stock market has been open for a little over 30 minutes now. This is a trade review of a position I'm currently holding involving the SPDR S&P 500 ETF, ticker symbol SPY. And as of the time of this recording, the ETF is quoted at $474.92. And since the stock market started trading, the ETF is up a little over $2.20. So this is a chart layout at the 7-day 7,000 tick level, which means each candlestick represents 7,000 trades consisting of both the buy side and sell side. This is the current candlestick right here that started trading maybe 5 minutes ago. But here, this line is just a visual markup as to where I took a short position, meaning I'm bearish on the ETF heading into today's close. I didn't short the common shares, I shorted via option contracts, specifically contracts that expires at the close of today's trading session. And relative to the spot price, I selected the $472 strike price. And as a buyer of option contracts and bearish, I'm on the put side. And when I entered this position, the ETF was quoted at $474.85. So essentially what this contract is saying is that on or before the close of today's trading session, I'm anticipating the ETF will be at or below $472. And just to help me navigate through this, what I did was I had overlaid this regression channel, which appears to be the most common market structure since yesterday after price broke above this 469 support resistance level, which I marked up. The other support resistance level is 473. And when price broke above this, it created this gap right here. So from my perspective, it appears that these two levels are valid. And with this regression channel, the upper yellow is acting as resistance, the lower yellow is acting as support. So right now, price appears to be going sideways. However, as price approaches this yellow band, I'm anticipating that price will start fading to the downside, possibly starting to retest 473. If that does occur, then that would fill this gap. However, I'm anticipating that this support level will not hold and price will continue fading to the downside. So that's the general thesis for my bearish outlook. Also, there's another gap here that was created earlier this week. This gap could potentially get filled sometime next week. So if this starts pulling back today, then we might see some continuation heading into next week for filling this gap. So with all that said, switching over to the trade tab. So right down here are the details. So real quick, earlier this morning, I picked the 468 strike price, which is further out. I got into the trade, but then the trade started going against me very quickly. And also, I was thinking that this was too far out for price to reach, so I closed it out, incurring a $34 loss. And then when I closed this out, I jumped into the 472. So I went a little higher, and I did pick up 5 contracts. All 5 contracts expires worthless today. There's 0 days remaining. So these are same day expiration, essentially. And my premium, I selected, I got in at 24 cents. But considering each option contract is equal to holding 100 shares of the underlying security, it's the premium times 100. It's $24 per option contract. I picked up 5 contracts. So at risk, not including commission, it's about $120 of capital for this short-term trade. And unfortunately, the trade is going against me as the premium is quoted at $17.50. And the P&L is reflecting a current loss of $32.50. So that's the general thesis for my bearish outlook and current status of this trade. So for the purpose of time, I'll pause it here, let the trade work itself out. I'll do a status check heading into the afternoon session. So until that update, I'll be back. So quick status check. It's 2:23 p.m. Eastern Time. So the S&P 500 is dropping. It's currently priced at $472.70. And the option premium for my contracts right here under the ticker, this is involving the 472 put. It's currently quoted at $53, $51 per contract right here. So then if I was to close it out, profit potential is at 216. So my entry price is right here at 21 cents. I was able to add 2 additional contracts under the net position. It's reflecting 7 contracts right here, right by the ticker. So max loss is $148 if I don't close this out, and the premium drops to 0. So right now it's pushing over 300. It's broken below and it's still breaking. So I'd like to see if I can close this out at 500, anywhere around 500. At the option premium would then be at $93 per contract. And I'll get into the details a little bit more later, but I just want to keep tracking this. Right now, price is broken below the support level. As a matter of fact, let me put my stop at 50. At least I'm guaranteeing this is a profitable trade. Let's see. Yeah, it's breaking down. It's currently at 1 standard deviation. If I pause it. So this is the SPY chart, the 2000 tick. So the red line is the 1 standard deviation. Price is now over here, so it's broken below. As I was anticipating, a break to the downside towards 472 is in progress. Also, I shorted 25 actual shares of the SPY ETF. So what I'll do is I'll switch back to the option contract. So right now, premium's pushing 74, profits at 370 if I was to close that out here. I'd like to see if I can get it at like 88 or 90. So the 1 standard deviation, it's most likely going to break below it. Let's see if I can get 500 right here, sitting at 593. Let's see if I can close 7. 503. Let's see if I can close it out here. So it's sitting, my order's sitting at 93 cents or $93 for a $503 profit. I'd like to see a strong push to the downside just to break that 1 standard deviation. I'll switch back to the SPY chart. So here's the option contract. My order's sitting right here. And for the common shares, I shorted 25 contracts, which is a little under $12,000, as each share is at $473.98. So I kind of double dipped on this trade, capitalizing on the option trade, which is based on this white line, and my short entry right here. I'd like to see one strong push to the downside. Let's see if it can get filled. What I'll do is I'll pause it here. And let's see, I don't want to take this video too long. I'll give it up until 2:30. I'll keep recording until 2:30. I'd like to see a spike down. So that gap is filled. The gap that I mentioned earlier, it's now filled. So yeah, it's sitting at like to see the 230 one spike down. So here we go. It's coming. So common shares here. I have open order to close out this position if or when price hits $469, and that is a profit. Another take profit target right here, a little over $100, which is fine. Here we go. Oh, so close. I'd like to see a strong push. 472. There, I got closed out. So I am out. The position, the option trade is done. I was able to close it out at 503. And if I switch back, so the option trade is flat, it's zero. I have net position. So the option trade was a 503 take profit. And I'm still sitting on the the common shares. So the common shares is still right here. I have an open order. What I'll do is I'll move my stop order, my open stop order, which is sitting right here at $25. I think it was $25 or $30. Yeah, it was sitting at a $35 stop. What I'll do is I'll bring it down to my entry price on my short. So this way I'm guaranteeing this to be a risk-free trade. Yeah, so what I'll do, I'll move this offline. If I switch over to the trade tab. So the trade tab right here under the option contract of 472, it's a profit of 503. Yeah, it took the whole day to work itself out. I mean, it started fading, but then essentially went sideways and then finally broke to the downside. I don't think it's going to hit 469 by the end of today. There's only like another hour and a half of trading. It might consolidate here and then drop, but here, this is the gap that was filled. This is the attributing factor for this short bias positions, just filling that gap. And as mentioned, there is this other gap sitting back here, this big gap. And that might get filled next week, sometime next week. So one gap down, and we have that other big gap here. So yeah, so for that purpose of requiring this short trade, until the next setup, I'll see you.